Okay, testing, 1, 2, 3. Comment allez-vous? How are you? Good morning, FX Street. How you doing? How are you? All y'all? Yeah. Good morning, FX Street. Trade non-farm payrolls live 201. Yes, 201 months of doing this webinar with FX Street. You're like, Wayne, that's more than 16 years of doing, right, of working with FX Street. And I'm like, no. That's more than 16 years of doing this webinar. I've been working with FX Street for more than 16 years, more than 17 years, probably more likely 18 years. And let me tell you, that's probably longer than your last Forex guru has even been alive. Yeah, amazing, huh? So anyways, thank you for being here. I appreciate you. We're going to spend a few hours together. And I hope that we can safely conduct technical and fundamental analysis with the overriding goal of learning how to plan our trades in advance. With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Why? Well, reward is a function of risk, and risk is bad. And all investment, because it carries risk, has a potential to lose money. So, at FX Bootcamp, which is a community I started almost 20 years ago, we have a credo, and then the first part of the credo is don't lose money. The first part of the credo is not make as much money as you possibly can. No, the first part of the credo is don't lose money. And that shapes everything. Cool. So anyways, we have non-farm payrolls. I'm sure you want to talk about that. What else would you like to talk about today? Are there particular topics you want me to cover? Are there particular pairs you want me to look at? What do you need? Talk to me, Goose. Okay, well, let's start there. Pound dollar. Fine. Let's go there. Let's zippity over. Do some dollar pairs. All right. So Pig Dog is here. So my weekly swing trade, I'm short at the central pivot. The price is down here. So I'm short at, what do you want to call that? 120.75. We're now at 118.50. So I'm up more than 200 pips on that trade. So clearly I'm a bear. One of the things we talked about last night in the swing trading group is the follow-on. And the follow-on would typically be in that kind of zone. Now I thought maybe it could go all the way back to 120. Well, no, all it did was come up and tickle it. If you don't use pivot points, if you're going to also use moving averages, the thing that we talked about last night. And by the way, feel free to join FX Bootcamp. It's $88 a year. And you're going to get a bajillion pennies worth of value. And that's worth a lot more than 88 bucks. Oh, so I was going to say do that and take the training course. That brings up another thing. Look what was added this morning. So this is FX Bootcamp. Let me go back. Okay, here's the dashboard. So you go to the training course, and then here's all the 11 training courses. Planning Essentials, Introduction to Forex, Complete Guide to MT4, MT5, Forex Trading Basics, Technical Analysis, Principles of Price Action, Central Banking Fundamentals, Macro Principles, Swing Trading, Day Trading. Oh my God, I couldn't even fit another training course. It has to go to page 2. This was added this morning. Page 2 is the oil trading course. You click on oil trading course. So this has been added. Every member now has this. No additional fees. Introduction to the oil industry from 1850 to today, the geology of oil and gas. Upstream, learn how to drill. Unconventional, learn how to frack. Midstream, learn how to refine, right? There's a bonus video that Shell did back in the 50s, which was really cool. Downstream, how to sell gasoline. Legal and compliance issues. So supply side analysis and seasonality. Got to go to page 2. And there's one more. Who sets oil prices? Isn't that cool? And these are about what? Well, let's just pick fracking. You guys want to learn how to frack? Or should I do how to drill? Let's do fracking. I'll open up fracking. And it's an hour and a half each. Oh my God. Okay. So like, not a joke. And maybe I randomly picked that one because that was long. Well, let's do how to drill oil. No, hour and a half. How about the geology of oil and gas? No, hour and 20 minutes. So, yeah, no joke. I believe the training courses are now more than 100 hours. There's 100 lessons. There you go. Okay, cool. There you go. So, going back to this. So the other part was going back to the swing trading group that I did last night. The other choice was kick it off the 5, kick it off the 21. And the 5 or 1, and it's also the central pivot. So it's a basic swing trade. Yeah, the question is, am I long or short? Yeah, of course I'm short. Okay, of course I'm short. Why am I short? I told you 3 or 4 months ago, let's say 100 days ago, I'm just randomly picking a number. It's actually more than that, but let's just say that the second week of December, I would exit this market to the upside. And without a doubt, by the time we get to this period, I will short the pound dollar. And I prioritized pound dollar over other currency pairs. So this is very specifically pound dollar. And within 48 hours, there's 200 pips profit on that trade. And I told you 100 days in advance. Okay. There you go. Now, the other way you've been probably taught how to trade is stare at it on a 5-minute chart and wait and see what happens and then do something after it happens. So Hub says, can you enter that if you miss it? Well, let me go back and show you how I got that trade. Let me go back to the 4-hour. I guess I could go to the 1 hour. I actually shorted, I think it was here. It came down, I was profitable. It knocked me out at break even. So I got, right? So I got knocked out. and inside of here, I sold it again. Because I had conviction and I had planned it days, weeks, and even months in advance. So I actually shorted here, got knocked out, and then re-entered, okay, and took it down. Okay, and then, so now you have a lower low. So this is what I talked about last night about how do you get into this trade if we were making a lower low last night. And so now I got to go back to a different time frame, this one. And so what our plan was, okay, is we wanted to look at this pivot here. We wanted to look at this pivot here. We wanted to look at this EMA here. And we wanted to look at this EMA here. And somewhere in there, the plan, again, last night was something like this. Now, it could be shallow, kick it off 1920, or it could go even higher all the way to 120. You're like, but that's 100 pips different. Well, that's your job. You need to figure that part out. But you're not trying to figure out what to do. You're just trying to figure out what price am I going to sell it? Am I going to sell it off the 5 EMA? Well, that's your first part of the job. So let's say you're here, and that is around 1925. So now let's go into a smaller time frame. And was there an opportunity at 1925? And what we're looking at is 1925 is 1925 is here. So the question is, if you're now doing your job and you understand that this price right here is the 4-hour 5 EMA, and you're already looking to short, at what point do you see the short? Lower low, lower high, 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 lower low. Oh, but still, at what point do you see it? Now, to me, all of that is really irrelevant. I really don't care. Because if you don't see this coming, you don't know how to trade properly. You're reaction Jackson. Do you know what I'm talking about? Because if you got the green, which is called strategy, you think that this pair might reverse from up to down, and you want to be a bear if it does, then recognizing that it's happened has got to be easy. You're almost certainly short here, or you're very definitely short there if you had the strategy set properly. Now, if you had the strategy set properly, but you didn't trade one of those, you actually don't know how to trade. I mean, we got to fix that. Okay? You got to fix that. Okay? So now what? What's your trade plan? Well, we need to do some basic technical analysis, and we got to start looking at things. And you're like, well, would you sell it there? Okay. Would you sell it here? Let me get rid of this one. Like, think about the logic of trading. Think about the logic of trading. If you are a bear, would you sell it here if it rolled over on a 5-minute chart? Yes or no? Remember, we're looking at time and price. If it came up and then 5A cross, let's say. Yes, I would. My name is Wayne McDonell, and I approve this message. What if it did this? Instead, it came up to here and then rolled over. Would you sell that? Risk reward should be good. Well, that has to do with the target. What do you think the target is? Zohaib? Okay. How about this? Let's say it goes to up here and rolls over. Do I take that? Okay, so hey, that doesn't make sense though. So you said you wouldn't take the shot, but your target is down to 115. So you're risking very few pips compared to your reward. But anyways. Okay. No, this one I don't trade. What's the wrong with the one on the top? It's a higher high. I don't sell higher highs. I sell lower highs. Okay. Okay. Cool. Yeah, well, we're talking about tactical entries, not strategic planning. I'm still not going to, right? I still don't want to sell a higher high. I can still wait for a drop, a lower high, and then even a lower low, and then a lower high, right? Anywho. All right, we can talk about USD here. Okay, so for example, Darko, if it did this and this was a higher high, let me mark this as a higher high. When could I short if I was already a bear? I just can't sell the higher high, but I could sell a significant drop and then I can sell a lower high. Okay, and then a lower low, then I could sell that lower high. Then a lower low, so then I could sell that lower high. Okay. Then a lower low, so what? Somewhere between here and I can sell the next lower high. That's a trade for later today or tomorrow. Okay. So that's 68.5 and we're at 78.20. So that's over 100 pips profit already. Cool. Hey, did you click the thumbs up button and thank FXstreet for hosting us for the 201st month? Did you share some love, some Forex love? The moderator and I have to put 6 hours of our time into doing this event, and all you have to do is click a thumbs up button. Don't be rude. Kick down, come clean. Don't be a holdout machine. Okay, even if I'm a jerk, our moderator is amazing. There's no moderator better than our moderator. Yeah, so thank you, right? Thank you, thank them. Boo boo, boo 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 boo. How about that euro? Oh, shalakalaka. Now euro, I'm short at 106 and we're down at 105. So that's just about 100 pips. That's a snoozer. Snoozer loser. So you have the down, the up, the down. Okay, notice this. Roll reversal. Okay, and hopefully this keeps going. I'll show you what the plan is. Okay, that's the plan. Now, there are people here that can confirm I set that plan up over a month ago. There's the plan, Stan. Look, look. Don't turn your back on me. I won't be ignored. Look at this. Double top, lower low, lower high, sell, sell, sell. And where could this go? I have it at 91, and I'm short at 106. What? 1,500 pips potential. But actually, that's the conservative target. The aggressive target is 86.19. 2,000 pips potential. How's that for your risk reward, Bubba? What's going to happen to the dollar when the job data is good? Oh, Johnny's got it too. Right on. All right, let's discuss that. Flavian brings up a good point. Well, there's two things. Let's find out what you think. Okay. Let me know. I can't do a poll. I'm only a moderator. I'm not a host, so I can't do a poll, unfortunately. So let me just ask you. Is non-farm payrolls going to be higher or lower than expected? And if you don't know how to even guess, type in a question mark. So I want to see higher, lower, or a question mark. Up is a fail. Up wasn't a choice. Once again, the first thing I learned when I went to Harvard in my 40s is that you have to answer the frickin' question. So there's no up or no down. I didn't say that. I said higher, lower, or question mark. Aha, there you go. All right. Now, the second part of that looks like most people say higher. Lots of question marks, which are fine. Thank you for being honest. Now, I've done the research. I've done such a deep dive in that I have an opinion too. Okay. But let's then move on. But by the way, I have an opinion and it's not a guess. I can be wrong, but I have some pretty serious facts. I did post an article on FXStreet several years ago showing you how to model the employment situation report so that you can make such predictions. I even gave 2 different ways to trade it. Did you read the article? Have you done your research, or is this just for fun? Hey, Wayne, put me in a trade. No. Okay? There are plenty of children on YouTube that will do that for you. Okay, so find that report and read it. The next step is, why does it matter if it's higher? Well, the market, because remember, we're not trying to figure out right or wrong, good or bad. We're not trying to outsmart the market. We're trying to figure out the market. You're not big enough to fight the market or beat the market or push the market. So you want to look at Forex as not as a zero-sum game, but instead as a beautiful dance. This is a symbiotic relationship. Bulls and bears each have their turn. And we want to play well together so nobody gets their toes stepped on. And you get to enjoy each other's company and the music and the evening and the romance of making money. So the market is trying to figure out, when will the Fed stop raising interest rates? Moses tried to find it, the article. I think all you have to do is go on to FXstreet, type in Wayne McDonell. Okay. Anywho, maybe we'll find it for you. Okay. All right. So the market is trying to figure out when the Fed is going to cut interest rates. Well, the logic, I believe, is if non-farm payrolls, in particular a trend in non-farm payrolls, shows that the United States is losing jobs, then the interest rate hikes they've already done are starting to work. So they don't need to do many more. So if we have a low number or even a negative number, it's proof, the first proof, that all these rate hikes are working. Sticky inflation will likely to fall. And the Fed could start thinking about when to wrap up the interest rate hiking process and get to their terminal rate. But on the flip side, and most of you guys expect a big number, if the number is big and shows that American companies are still hiring, then there's been no positive impact from the Fed rate hiking cycle, and they will need to raise rates more at a fast velocity for a longer period of time and to a higher terminal rate. Now, I've done my research, and I know what's priced in. I know what institutional investors think. They've already put money on the line. I've done the analysis. I know what they're thinking. And in my humble opinion, they're wrong, according to current economic data. So again, if non-farm payrolls comes out and it's a big number, then what's currently priced into the market is mispriced, and the market will have to reprice. That will probably mean a stronger dollar. And maybe that's why I'm already buying dollar. Could be a rabbit, could be. Okay. Yeah. How do we check? How many people want to know how to see what institutional investors think interest rates will be in the future? And then specifically, if I said, oh, institutional investors believe interest rates will be X in June and X in September and X in December, How do I do that? No, it's not 10-year. 10-year behaves differently. Let me just show you. Okay. By the way, if you don't know these things, I'd say half the people in this chat right now already know this information because they're members of FX Bootcamp. So if you don't know this stuff, you're trading nay-nay. You're naked, bro. You're not thinking months or weeks in advance. You probably can't plan 3 or 4 days in advance. Hey, don't get pissed at me. But I teach this stuff all the time. Just join FX Bootcamp, dude. Just join. All right, cool. So interest rates are right here, 4.25. Okay, in February, there's a 60% chance they're going to raise, okay, by only 25 basis points. And a 40% chance that they're going to raise by 50 basis points. If NFP comes out, let's say, a high number today, it doesn't even have to be higher than expected. Just a high number. These guys are wrong. These guys are guessing. Now, I've gone through and I've done research. And I don't agree with these guys based on facts that I've looked at and then interpreted. I don't know why you would think that. I've looked at the subcomponents of many different markets, in particular in employment, so I don't get that. I also listen to the Fed. Literally, what do the Fed members say? And I disagree with 60% of the market. Now, maybe they're smarter than me and they can see the future. I'm just looking at facts. So I have a feeling if the number is good today, these guys are wrong, and this will go up, and this will go down, and that will make the dollar strong. But I don't know what NFP is going to be. So if NFP is low or even negative, okay, then these guys are right. All right, fine. But then look at this. This is really nice. You can go to March, May, June. Let's go to the June meeting. June meeting is a great meeting. Okay? The market, if you go 44 plus 20, let's just add these as the, right? 60% of the market is already pricing in 5.5. 5.25 to 5.5 by June. Basically, nobody thinks it'll be higher than 5.5. So you have to start doing the math. 4.25, 2 meetings at 50, 5.25. Then what? Well, how do we get here? So they're already pricing in a slowdown. Gabriel's, you can buy it. In fact, thank you for bringing up my super secret fundamentally based alert service. I'm trying to launch that officially next week, but I'm in Cuba for the next several days. Oh, but you're 17? My son's your age. He works. He's got tons of money. I'm Italian and I want to study. Cool. First thing you need to learn, get a job. Work your ass off. Save your money. And invest it. Yeah, I'm going to Cuba. As soon as I'm done this, I'm going to Cuba. So anyways, I'm going to be, the reason I'm going is I'm going to start my next book. Yeah, no, but Gabriel, I know that sounded really pissy, and it really was, But honestly, that's what the first lesson of Fight Club, okay, is get a job, work your ass off, don't complain, show up on time, smile, make your boss look good, put in the time, and then any pittance that they pay you, save every single penny of it. Don't spend it on candy or booze or whatever kids spend their money on. Okay? And then what? Save it, save it, save it. And then at some point, convert your savings into an investment. So when you learn economics, savings are equal to investment. And anything you don't save or invest goes into consumption. Okay? This is what 17-year-olds typically do. They get money and they convert it into candy, booze, porn, I don't know, whatever. And that money is gone. And now they're broke. Okay? Instead, if you work and you get paid, you put it in a bank and you save it. And what does the bank do with it? Invest it. Or instead of putting it in the bank, you invest it. You buy some stock or something. You buy some bonds. You put it in your Forex account. Good. So you either save it or, right? You either save your money and someone else invests it on your behalf, or you invest it yourself. And the expectation of savings and or investment is return. Return on investment. And poor people spend the money as fast as they make it, and 30 years later, they're still poor. What you have to do is stay poor, save your money for as long as possible, never spend your money, never spend your money, and 30 years later, you'll have more than enough. And your kids will probably be better off, and they won't grow up in poverty like you did. But give it to you? No. Hey, why would I do that? That makes no sense. Give it to you. No. Cost me a lot of money. Okay? No. Yeah. Sir, I have a problem with bootcamp. I sent an email. Yeah, I'm going to work on that today. Hey, no, it's no harm, man. Look, one of the things I do teach my kids, Gabriel, is never be afraid to ask. Okay? Wow. Yeah, there you go. Now, I offended somebody and their message is being blocked because they're very upset and they're saying rude things. But hey, look, I know I was rude, okay? But here's what I'm trying to do. I don't have much time. Most of you are not going to join FX Bootcamp. You're just at yet another live stream on YouTube and you're going around and around listening to all these gurus, right? So Gabriel here doesn't have much, I don't have much time with Gabriel. So I got to be like effective in my communication. And the most effective way to communicate is to also invoke emotion. It's part of neuro-linguistic programming. If I just gave him an answer, it would just go in one ear and out the other. And we all do it. We forget 99.9% of everything that happens. So I have like 5 seconds to make an impact with Gabriel before I never see or hear from him again. And I got my message across. No, you can't have it for free, but what you need to become a successful investor or Forex trader is to learn things like work ethic. You see? So I'm like, get a job, work your ass off, save every penny. All of that is true. If you're going to be a success as a business person, as an investor, if you're going to change your personal economy, maybe even change the path of your lineage, that's what needs to happen. And I need to get that across in seconds. Or he's just going to go on and go to some other guru that's going to say, yeah, I'll teach you how to get rich quick. Okay? So there you go. So that's all. So to the person that was upset that I was being rude, yeah, I risk that for sure. I risk that. But I am trying to get an honest message across. So I apologize for the way it came across. But I have to get the message across. Okay? And if I piss somebody off, they remember that for years. Okay? There's a good chance now that we've had this discourse, this conversation. There's a good chance 1 year from now, Gabriel will remember what I said. There's a good chance now. Cool. Now, let's go. Right? So something in here, what we see is there's a slowdown in interest rates being priced in between February and June. Because if you go 50, 50, 50, 50, okay, so we're at 4.25, 5.25, 6.25. We should be at 6.25 by June at the current rate. So obviously somewhere in here, a slowdown in interest rates from 50 basis points to 25 will need to occur, or they're wrong. And then you go all the way out to September. Look at this, guys. Look. What does this say? Institutional investors expect an interest rate cut. We're going from 5.25 back down to like 5. You see, there's an interest rate cut priced in there. Let's go all the way to December. Definitely 1 or 2 interest rate cuts. The Fed cutting interest rates. So let me be bold, if not arrogant. These professional institutional investors, these are banks lending money to other banks. This is smart money. That's why this is going to come off as arrogant. But I've done my own research. I can back my truck up. Okay? And guess what? This is wrong. All of this is wrong. Institutional investors have it wrong. According to my research of economic facts. Now, the facts will change, and I might have to change my tune, but based on what I see now and my understanding of economics, okay, and I have a lot of education in economics. My interpretation of the facts is they're wrong, and in particular, if they're wrong, the stock market's going to come down further, and the dollar is going to get stronger. And right now, that's working for me. What do you think about short on euro pound? Okay. I don't think, first of all, I only have research, and I wouldn't even consider looking at it. Okay? So like when I'm over here, for example, let's go back to the pound. So you're saying buy the pound and sell the euro. I'm short the pound. Okay, well, I'm short the euro too, but when I go out to here, for example, pound is weak, euro is strong, so selling it makes absolutely no sense to me. Okay? Okay. And Sandeep says, so why am I so arrogant? I've done my research. Okay? I did a 2-hour presentation on Wednesday. And I explained what I think and why I think it. And I go over point after point after point after point from massive different amounts, probably 8 different types of research that all lead to the same conclusion. So it's not really arrogance, it's conviction. So I look at what others are pricing in, and it doesn't look right to me. Do you understand? I look at it and it doesn't look right. Now, Sandeep says, but you still may be wrong. Absolutely. Now, what do I use to confirm or deny my hypotheses? Sandeep, what's the best way to confirm I'm wrong? And by the way, knowing you're wrong is 10 times more important than being right. 10 times more important. If I'm right, it's obvious. I did the work. It's obvious. Knowing that I'm wrong is not obvious. So how do I get that correct, Sandeep, so that, like hedge funds that blow up are because they traded their thesis, but they didn't trade reality. So how do I connect my ego to reality? Yeah, stop loss is part of it. Price action is part of it. Sandeep, do you have an answer? Probability, too esoteric. Discipline, yeah. Numbers, no. Risk, nah. How do I confirm or deny my fundamental hypotheses? Sandeep, are you going to answer? Come on, Sandy. Well, the guy just disappear on me or what? I guess he said, he's a jerk and left, huh? Well, Sandeep's loss, I suppose. Technical analysis. I upset him, his emotions. Sorry, Sandeep. No, it's technical analysis. There he is. I do agree with their fundamentals, but I do not, you're talking whenever you're saying is right. No. So again, turn the emotions off, Sandeep. Look, don't get upset with me. Again, if I'm triggering emotions, then you're listening, which is great. Look, I have conviction for my research. I did my research. I know the facts. I've looked at the data. And from that, I've interpreted the data into a bias, otherwise known as a hypothesis. But do I know the future? No. I know many variables. Okay, and the facts will change, but I know what the variables are now. I know what they point to. Then I thought about or did further research on what I should do if those trends continue. And now I get to a trading bias. I know what I think. I know what my plan is. I know my strategy, Sandeep. And I have high conviction for it because I know it's real. But I don't know the future. I don't know the future. So, yes, I have strong conviction for my strategy, but I don't know the future. So then I use technical analysis to confirm or deny my hypotheses. And I think being wrong knowing you're wrong is 1,000,000 times more important than being right, because I should be right. So I'm not trying to come across arrogant that I know the future and I'm better than everybody. That's not me. You don't know me if you think that's what I'm saying. What I'm saying is I've done 100 hours, 1,000 hours of fundamental work. And I know what I know, and I know. I know what I know. And I know that I know what I know. And I know what I'm going to do because what I think I know based on the information I know. So I am not predicting the future, but I am setting up strategy. Then you use technical analysis. And let's say I'm a bear. Let's go back to a trade here. Let's go back to that pound, for example. So I said 3 months ago that this week I'd sell the pound dollar and make money. Okay? And then in that case, if this starts making higher highs, I'm wrong and I need to stop. Okay? Cool. Yeah. Sweet. That's what technical analysis is for. It doesn't tell you why. It just tells you price and time. Cool. So again, let's try to predict the future for today. If the number is a big number, the Fed will have to continue raising interest rates. That market I showed you, the Fed funds futures market, it will shift. It will move. What it will tell people is that they might be wrong. Interest rates might need to go higher. That's not priced in. And the higher interest rates will lower the stock market and raise the value of the US dollar. Okay? That's a lot, isn't it? Well, why would the stock market go down if we have a good number? The expected return for a stock is equal to the risk-free rate of return plus the beta times the expected return of the market minus the risk-free rate of return. Shoot, this is so hard to draw with. Okay? See? Simple math. That says if we have a big number, Fed will have to raise interest rates farther. That's not priced in. This has to go up. The stock market falls. If this goes up, the stock market falls. If the stock market falls, the correlation is pound dollar falls too. And I'm already doing that. But like I said, I can be wrong. I don't know the future. And something else could happen. We'll be up here. Well, I won't be selling up there. So if I have strong conviction for selling, okay, then what technical analysis is telling me is I sell lower highs. I sell lower highs. I don't sell here. I don't sell here. I don't sell here. I only sell lower highs. But the thing is, I'm not looking to buy. I'm not thinking to buy. And I've prepared this weeks and months in advance. So now I'm in on it. There you go. Yeah. Well, thank you, Sandeep. And so we drilled home a point where I simply have my research. And if I'm wrong, I stop trading. Does anybody have a link to the article on FX Street that I wrote about how to prepare for, model, and predict non-farm payrolls, and then how to trade it? Yeah. It's on FX Street. Woke up this morning as a miracle occurred. The most beautiful sound I'd ever heard. Whoa, oh, 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 oh. Do, 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 do. Hey, I did. Yeah, man, I'd love to go back to Hong Kong. Tried to get to Japan, but it ain't happening, man. So we'll look at the numbers here. And then we'll look at the subcomponents. Oh yeah, we can go through correlations. Sure. I'm young but not dumb. I'm just boo-boo-boo-doo-doo. Oh, I'm already out of coffee. Shoot. Okay. We still have about, what, 90 seconds or so? No. Should be now. 8:30, 8:30, 8:30, 8:30, 8:30. Here comes the drums. Numbers are coming in. CAD reported faster, 223. Whoa, whoa, oh, whoa, oh, 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 oh. Yeah, thank you, Peter. 223, red hot. So everyone that said higher, congratulations. Let's take a look at the stock markets around the world. Woke up this morning as a miracle occurred. Okay, let's shrink this. Let's go to the window. Okay, let's see. Hong Kong's still red hot, huh? I hope that's good for my Chinese ADR stocks. I bought them at like 50% off or something like that. And then they dropped like down to about -65, but I think it's coming back around. So that's kind of cool. Because I bought them way back like March or April or May or something. I think I bought them in May, Chinese ADR. So we'll see. Anyways, Hong Kong doing quite well since October, and this is a normal time for this stock or this stock market to do well. I'm surprised how well it's doing now, and we've even topped out. We're done the month of January already. You see that? Central pivot. Where's my drawing tool? Oh, here it is. Let's delete this. So this is Hong Kong, and we went from the central pivot on the first day of January, and that predicts this top right here, 21,000. And it went a little higher and then we just fizzled right out. That's the projected move, which is interesting. And, okay, this is 95% of the expected range, or 95% of all the range. So anyways, we're well above, we're basically at 3 standard deviations, which is probably closer to 98, I think. Amazing. Okay, what else we got going on? Let's take a look at the Euro 50. Okay. Okay. Now, if you think we're going to have a tough year ahead, the high on the Euro 50 is going to be 40.89. So let's just call it 41, son. Okay. And this could be bearish projected yearly high. All right, let's not put yearly. Let's just put 2023 high. What do you think of that? How does that smell? Based on my technical analysis and my fundamental bias, price might go that high, but not higher. Oh, Johnny's in and out, huh? Johnny's in and out like that. Let's take a look at how exotics are actually reacting. Let's look at peso here. Check this out. Okay, check this out. So I'm short here. I'm short at the top of the screen. And we are now trying to make a new lower low. So why is this happening? Well, if the Fed is going to raise interest rates, then the Bank of Mexico is going to have to raise interest rates even further. What do you think of that? John wants to know how he can show his results. I don't think we're actually interested, John. But good for you. Congratulations, John. As I say in my book, John, there's a 3-second rule. You can ring a bell, high five your cat, right? Angels will come down on high and shower you in tears of joy and trumpet from the heavens at the beautiful trade you made. Yeah. Cool. So anywho, so this is where we are. The Fed's going to raise interest rates higher. That needs to be priced in, and peso's there. So, I have 850 pips floating profit. Cool. So this one, yeah, this is pretty cool. And the next move down is 19. So, we'll see if this can continue that way. And if, of course, the Fed keeps raising interest rates, which I believe to be true because I've done the research, then this will probably, maybe, hopefully, keep going. Cool. What else can we do? Let's do some commodities here. Let's do some gold, oil, and Bitcoin. Let me move this to tile. I guess we can do this. Okay, so here's a plan where I'm wrong. In the moment, I'm wrong. Let's say a month ago, I created this plan. Plan A, short. Plan B is short higher. Okay. And where we are now is actually a pretty okay place. So we can do, because that was the idea. I just haven't done this. Plan B, short. Okay. So let's look at plan A. Did I lose money on plan A? Plan A, I did way back in December. The plan was somewhere in the middle of December that gold would fall. Okay. The thing is, there's no entry here. So remember, there's strategy. So plan A is strat. Once you have your strategy, then the rest is tactics. And your tactical entry is based on the market turning bearish. And it never did. And so that's where, like the previous conversation, everything has to be confirmed or denied using technical analysis in a scientific methodology process. So it's more like now plan B, this is a reasonable place to short based on pivot point analysis. And so if we breach the 21 and then double topped and then lower load, for example, this might be correct. It's just not correct now. And I might have to wait till February or near February to sell. So I just wait. Greg says, hey, all markets are flat. Yeah, well, you know what? Stock market needs to open, right? Stock market needs to open. Yeah. Okay. So Gotti, I put you in a timeout. I need you to chill out, man. Sit back, relax. If you become a distraction, I will have to remove you. Otherwise, you're welcome to stay, man. Just chill out, relax. Okay. The Exile says, yeah, well, if you don't trade on that time frame, yeah, there's no entry. Yeah. Okay, well, let's go back to that. So for strategy, I'm either going to use the daily or the 4-hour. And either way, I'm not quite there yet. And so if I'm a bear, I could get short early, but there's a couple of things that I'm looking at here. Okay, there's definitely support there. Okay, the Exiles, I'm going to use a 4-hour, for example. I would like to see a breach of that before I truly come a bear. However, if I have strong conviction and therefore I'm aggressive, I can also sell up here. So as a bear, there's only two things I can sell. Now, I want everybody to listen. I want you to hear this. So please listen for a second. Okay. If I'm a bear, I can sell double tops and lower highs. What do you think? That's right, isn't it? If I'm a bear, there's nothing else I can do. It's either a double top, which is the first trade of a new trend, or I'm selling lower highs. So if I'm a bear on gold, which I am, I can't sell now because it's not a lower high or a double top. So I could sell here or I could sell here. And what I'm looking for is behavior like this. Up, 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 hit resistance, sell. Or down, 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 up, up, hit roll reversal, sell. The first one's a double top, check, I'm allowed to engage. The second one's a lower high, I'm allowed to engage. The moving averages on this setup tell me it's probably going to double top at 1860. Okay? Now, Peter says, well, what about a 1, 2, 3? Well, that is a 1, 2, 3 trading off the second one, or you can get a 1, 2, 3 inside the double top. So, like for example, Peter, you can get up to this first circle, which is a double top, and then you get off a 4-hour and you get on a 5-minute or a 15. And very often what you'll probably see here, Peter, on a 15-minute chart is it double tops. Makes a lower low, lower high, and you get a 1, 2, 3 because on a 15-minute chart, it's a double top, but it's a double top of a double top. So yeah, same thing. To me, it's the same thing. Or it does a head and shoulders, or it does a crown. It's all the same thing to me. Okay? Yeah. Yeah. So that's that. So I wait. I just wait. I wait. See, if I don't understand why it's going up, then I shouldn't be buying it. I just don't trade like that. I don't trade only. He blocked my chat. Well, okay. Well, I'm so sorry I didn't answer your questions, but there are a lot of people here, my friend. And I don't stare at the chat because I'm answering people's questions. So, but if I offended you, I apologize. Maybe one day you will unblock me. All right, so anyway, so there's the double top, maybe. Maybe, just maybe, just maybe. Hey, John. What's up, Indelo? All right. Yeah. No, I just, we're good, man. I just, once again, I had to communicate effectively. Just, I'm just saying, chill out, work with me. So that's gold. Let's do Biddy. No, Biddy. Sorry, I was looking at Bitcoin, but thinking WTI. Let's do oil here. This is our second day without making a lower low. So we could mark that as a particular floor. Okay. It's not very bullish here. It's neutral here. And there's a lot more bears than there are bulls. Okay. You see? So it doesn't show a lot of conviction to the upside yet. Now, I'm very, very bullish on oil, but not until we get through the recession, or let's say the worst of the recession. And I did a 2-hour outlook for 2023 going month and quarter by quarter by quarter by quarter. And I think we have a long ways to go before this economy goes from ugly to less ugly. I think things are going to get more ugly. So that's going to drag down WTI probably, or at least hold it down based on demand destruction economics. But SPR is going to impact it as well. So oil's it's got a little bit, has some fundamental complexity to it, because right now, like oil dropping from, let's do it here, or daily. Okay. Oil dropping from 125 down to 70 was unnatural. Okay. Why does the money matter? That's so funny. $3,000. Good. Now, if you made $3,000 on 50 pips, it's appalling. Unless he's got $30 million and you're like, oh, well, then it makes sense. It may actually not be enough. So the number is sort of irrelevant. So, yes, yeah. So anyways, but whatever. I'm not angry at John. I just asked him to chill out. That's all. So anywho, so this price here is not true market forces. This occurred because right around this period, the U.S. government gave 200 million barrels of oil away for free. Imagine that, huh? Imagine that, 200 million barrels of free oil. What does that do to a market? Well, you have price, you have quantity, you have demand, which we'll fix. So I'll do D star. We'll do supply, S1. Okay, we'll add to supply, S2. Okay, we'll have to label this oil market. We'll mark the original equilibrium, and we'll do Q1 and P1, price 1, quantity 1. I just want to show you that what we did is we increased quantity. So quantity went from quantity 1, quantity 2. So we got 200 million more barrels of oil added to the market for free. And what that does is you go from price 1 to price 2, so price falls. Quantity went up, price fell. Okay? You see what I mean? And so, not many governments in the world give away energy for free. or subsidize it, so they give it away from cheap. Well, normally Germany and the United States wouldn't, but that's what they're doing now. But places like Iraq and Libya and Venezuela, and I don't know about Cuba. I'll tell you next week how they handle that. But typically a free market doesn't do that. So if we just leave demand alone and we say, if this process of removing oil from the SPR, Strategic Petroleum Reserve, if this process ends, oil could return to the upside if demand still exists, right? Now, I have D star, which means it's fixed. Okay, or you can do D bar. You can fix it this way. D bar. Okay? Now, let's unfix it. What if, okay, right now, what started to happen more recently is we're dropping D1 to D2. Demand is falling because of a recession. And right? And now what? Quantity demanded is falling. So we go from Q2 to Q3, which is less than Q2. Demand has fallen. And then what? Price falls from price 2 to price 3. It's a double shift. Okay, you see? So that's, I think, the SPR supply 1, supply 2, I think is coming to an end. We have to pay attention to that. And now the next wave is demand destruction, which then gets us from Q2 to Q3, quantity 3, and price continues down. Now what? Well, once the recession is over and demand returns to a normal level, can we rebuild supply? Cool. No, am I going to give you a link to QuantBox today? No, I'm not going to do that today. You've had about 2 or 3 months to sign up. I'm going to officially launch it. I think I was going to tell you. I was planning on trying to just bang it out next week, but when I get back from Cuba, apparently I had a dental appointment scheduled for while I'm in Cuba. So when I get back, it's been shifted. So when I get back, I got to do this dental appointment. And then I'm like, well, but I want to launch QuantBox. So you should have the links to all those. You should sign up. I'm officially going to launch it. And there are many, many, many new features and benefits that I'm going to announce. And for those that are on the retail subscription, I'm going to blow you away. Okay. Live Zero says, when is the first time I covered non-farm payrolls? 201 months ago. Okay. Cool. Okay, you see the thought there? So now I think we're getting away from the government artificially adding to supply. Now, normally when that happens, I would say, boom, oil prices are going to go up. But now we're trading the demand destruction, the supply and demand equation. So there's two parts. and now the demand destruction's taking it down. But look, you could buy it. This is the monthly support pivot point. Did you know that? By definition, this right here, this price at 72 is support. Okay? Yeah, well, so Maida, I don't know about gas. That's the thing. I don't know about gasoline prices. So maybe I'll swing by a gasoline station and see what it costs and convert it. And if I find, Cuba gasoline prices are 75 cents in American dollars, and in America it's $3, I'm going to say, well, it seems to me Cuba is subsidizing. No, I don't think that's good. I don't think that's bad. It is what it is. I know in places like Libya, gasoline is cheaper than water. You might even prefer to drink the gasoline than the water. I don't know. Okay. Cool. So we got to pay attention. That is by definition support. It's a monthly pivot point. Can we touch CPI? What do you mean? Yeah, the Exiles brings up the ban on Russian oil production. Yeah, we'll see. Yeah. Yeah, but what do you mean touch on it? What do you? I don't know what you touch it. Touch on it. What are you asking me? I'm saying rephrase the question. Looking at Canada too. Canada added 100,000, dude. Let's take a look at how that reacted. Let's go to short-term indices. And let me cascade. All right. Canada benefiting from that, huh? Well, what do I think about inflation? Well, here's the thing. In the United States, gas went from $4 in my neighborhood down to about $2.80 or something. Okay. And then since then has been flat. And I think that initial drop was significant and it pulled inflation down. But then I don't think it's dropped by much anymore. So the rate of changes probably have fallen. I know things like lumber and used car prices have come down, but have used car prices come down further than the initial drop? I don't know, but again, the rate of change is probably different. When I look at employment, I convert that into wages and rents. And a good non-farm payrolls, a good ADP, a good weekly jobless claims, a good ISM services subcomponent, a good ISM manufacturing subcomponent. When I look like that kind of data and the trend in that data, I think wages and rents are the same. So let's say inflation, headline inflation then, has dropped from 10% down to 7%. Okay, are we going to drop now very quickly from 7 to 4? No, I don't think so. So I think inflation is likely to fall a bit and then maybe stabilize, but the rate of change is going to be dramatically slower in the drop in inflation. And very, very soon, I think we're going to get to a point where inflation does not fall and the Fed keeps raising interest rates. Cool. Which stocks are you playing? Well, I cashed out of NASDAQ completely. I'm triple leveraged short the S&P 500. My next play, as I explained, is probably in the energy complex further. The last things that I've purchased were BHP Minerals and Rio Tinto, and I'm up about 25% on each of those. So that's how the Wayne do. But so I'm going to wait. I'm going to wait for quite some time. My portfolio is 15% cash right now. Maybe closer to 10, but I'm working my way up to 15. Now, okay. So Andejo says, hey, so CPI could go up on the next news. Yeah. Again, you're saying the same thing that I said. What I'm saying is the rate of change is dramatically slowed. The things that are going to fall in price have already fallen in price, and they're either not going to fall anymore or they go up. I'm not sure if they're going to go up. I don't think they're going to go up because a lot of that is supply chain, right, that push lumber prices up, but we don't have that supply chain problem anymore. So prices have come down. Gasoline's come down. Okay, well, unless oil and gas very quickly changes, that's going to stay about the same. And then things like rents and wages, well, as long as we have good employment, which we do, those are not coming down. So like very, very, very quickly, we're going to be at a point where inflation's not going to fall anymore. And it doesn't matter what the Fed does until you start losing your job. Okay. Such a gambler. Well, the last triple leverage short was at 4,000. My top on S&P 500 was 4,107. So I don't know if I'd call that gambling, but to each his own. You don't have to like me. You don't have to like my trades. I'm not here to convince you I'm right. I'm not here to convince you I'm better. But I am trying to teach you the way I think. I'm trying to think of the process in which I gather and interpret data and then formulate a strategy. But I don't know if I'm right. And I'm not here to claim. Do you own some Bitcoin? I actually sold Bitcoin just recently, like minutes ago. I sold a half a Bitcoin, I guess. But it was a cash position, not a trading position. View on Tesla, I like it at $50. I like it even more at $25. Okay. My view on Elon, like him, he's screwed up. So anyways, let's see if dollar can recover here. Yen doing its thing. Look at CAD really enjoying the day. Okay. Euro was so ripper strong yesterday, and now is giving it all back. The stock market's still not open for another 21 minutes. Probably get a pop and then a drop. Ba 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 ba. I said you, brand new, a red blue blue. Woke up this morning as the miracle occurred. Bip 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 boo doo doo. All right, what else going on? What else should we look at? We'll get to the stock markets in a bit. Guess we can look at longer term. Okay, let's look at the longer term. Oh, right on, Andreas. So this is longer term, and this might explain what I'm trying to do on the shorter term. Okay, we had this dollar weakness for several months, which was predictable, by the way. And that this might be the next move. Okay, and I started buying dollar right in here. Now, as far as this, dollar weakness was expected to occur a couple of weeks before the U.S. elections, which is in here, and that by December 12th, I would expect the dollar to start getting strong again. Okay? So let's say third week of October. That's a 3. Can you believe it? Wow. This mouse is just hard to draw. Third week Oct. And third week September. Or December. Okay. And by the first week of January, I would actually be long. See, in this third week of December, okay, this period in here, that's mostly getting out of any dollar short trades. Okay? And then in this period in blue, it's actually entering dollar long trades. The Excel says, hey, is it the in the best interest of the United States to have a strong dollar? Well, what is the Fed trying to do? Support the economy or slow the economy down? So then maybe they like a strong dollar if the strong dollar slows the economy down. Yeah. So maybe it works for them. Maybe they love it. Yeah. Why is a weak dollar good? Well, first of all, you pay back your debt with dollars that are worth less. So it's actually good for an economy that is heavily in debt, like the United States. It's sort of like the interest rate on your credit card falling. You're like, I like that. But that's sort of an effect. What is the cause? Why does the currency weaken? Does anybody want to give that a shot? Money supply. You can increase the money supply. Yeah, that's one way. That's sort of like a how. Let's not worry about that. That's a change in policy. But no, just in a normal world. Kevin says because it's used to buy assets. That's only partially correct. You can exchange your money and buy a house that won't weaken the dollar. Corrupt politicians, that doesn't weaken the dollar. Illuminati, I'm Illuminati. I was actually given a lamp. When I graduated from Harvard, they gave me a lamp because I am now part of the Illuminati. It's pretty cool. I still have the lamp. The money needs to leave the country. Thank you, Lucas. So what does a rich country do? Why would a rich country make its money leave? Why does money leave a rich country? Investments in other countries. So we call that catch-up growth. You get faster growth in a less developed economy than a mature economy. So in the United States, you can invest into a company here and maybe make 3% a year, or like GDP in the United States averages 2.2%. But if you invest into, Hungary, it might grow at 8%. When things are good. If you invest in India, if you invest in China, if you invest, whatever, right? Invest in Vietnam, GDP will probably grow faster than 2.2. So you can invest. Also lower wages if you're going to manufacture something. So if you're going to make, shoes, you do it in Vietnam, not in the United States. The other thing to look at is consumption. So like when we look at GDP, for example, okay, you have C, let's do this in black. You have C plus I. We'll just leave it at that. C plus I. Well, no, we can't, right? Plus, I'm going to skip government. X minus M. Exports minus imports. All right. A consumer can go to Walmart and buy a 4K TV for $200. Does that strengthen the dollar or weaken the dollar? It's at Walmart. Does it strengthen the dollar or weaken the dollar? Or maybe nothing. Does it do nothing to the dollar? Okay. Here's what happens. Here's China. Okay. Okay, you take your money, you want a TV. China sends you the TV, and you send $200 to the interbanking system that gets converted into yuan. Okay, but let's just not even make it that complicated. Let's just say you send money to China, and China sends you a TV. And that weakens the currency. It's leaving the country. Now you're like, but there's less in the United States. Well, that doesn't change the value. What changes the value is there's more US dollars globally and less US dollars domestically. But it's the increase in the global supply of US dollars. You see? So it depends on where the supply is. So if you buy something American, if it was made in America, it wouldn't change the value of the currency. So what happens is we report this not as consumption, because when we do GDP, we're interested in domestic consumption. So instead, this gets recorded as an import. When you imported the TV. So it gets put on the $200 negative. $200 left the country, and that weakens the dollar. So if consumers don't feel rich, they don't buy TVs even if they're on sale because they're like, No, Andrea says, hey, you didn't say the TV was from China. Yeah, you're right. Okay, you're right. But yet, what's at Walmart? And does anybody own a television made in the United States? What is that, a Zenith? Zenith probably. Westinghouse? You own a Westinghouse? Yeah, like, dude, I don't know. They don't even have them. Okay? There's nothing at Walmart made in America. So if you go to Walmart, you're shorting the dollar. Okay? You're short the dollar and you're long worthless crap. Okay? Now, the same thing here is like, what if you invest internationally? The money is leaving. Okay? You're importing the opportunity and exporting your money. To get something to shore, you have to offshore money. Okay? So it doesn't really matter if it's consumption or investment. You're exporting money and importing something. X is for things like Lucas selling sorghum to Brazil. What happens? Sorghum leaves and money eventually comes here, right? So there's demand for US dollar because Lucas doesn't want Brazilian hey-hi. You might know it as real. He doesn't want any real. He's like, what am I going to do with a bunch of real? I got mouths to pay. I got bills to feed. So a Brazilian has to exchange their real for US dollar, and that means demand for dollar. Dollar demand is up, therefore dollar value is up. So exports increase the value of the dollar. Imports weaken the dollar. So in that case, what you want is you want Americans to feel filthy, stinking rich so that they go to Walmart to buy a loaf of bread and a gallon of milk and 4 pounds of hamburger meat and a pound of cheddar cheese and 8 hamburger buns. And they're like, we're going to Walmart. We're going to have a barbecue. Right? Then what? 36 pack of Coke, 36 pack of Bud Light. And then they're like, oh, look at this. Huh. Check this out. Look at the TV. $280, 65-inch screen 4K. Huh. Throw it in the cart. And they just buy it. Huh. Look at that. Oh, we didn't even know we wanted a TV, but it's so cheap. Throw it in the cart. And off they go. And you just, right? Now, buying Bud Light does not devalue the dollar. Buying the hamburger meat doesn't devalue the dollar. Buying the cheese doesn't devalue the dollar. Buying the TV does. Buying the hamburger buns don't. But you know what? The onions might come from Ecuador. That would devalue the dollar. Okay. Careful, John. I really don't like things like that. You are going against the grain of what I teach. Andreas says, hey, you're talking about the American way of life. Well, Western rules do that. Yeah, I don't like the signals, dude. Just don't do that. That's between you, your accountant, and God. Okay? I don't know you. I don't know your credibility. I don't know your experience. And you're telling potentially amateur traders what to do. So I don't like that. That's when I get pissed off. So be careful. Chill out, man. Okay? If FXStreet wants you to do a signal service for them, they might ask you to produce some license and registration documents. I want to look at Kitty Cat. Those were some decent numbers out today. Look at that, huh? Look at that. Oh, snap. Now, someone had asked earlier about euro pound. I'm like, I don't get it. You know, they're both essentially weak. And then look at euro CAD, just like, wow. So someone's staring at euro pound. I'm like, maybe you should be looking at euro CAD. You know? So look at that, just a beauty. The thing is, what's predictable and what's not predictable. Okay? Look. You will learn how to trade with pivot points at FX Bootcamp. Pivot points are important to me. Okay? That line there, if that's the top, the projected bottom is this green zone. Okay? And I would argue that it seems like we kind of farted around this price a couple of times today, even on the news spike. And that we did respect the bottom pre-news. So pre-news and post-news, these prices that we had on Monday were respected. Okay, now we have new news, new information to add to the market, and we've blown the doors off the projection. But it's new. I would argue that everything to the left here of the news, so let me do it this way. And then I'll do this. Okay. Everything here, I'm trying to hide it. I guess I can't. I have to go darker. Okay. Everything here is new and requires new analysis. Okay. I guess that should have been white. Okay? And so what matters most to me as a trader is not necessarily what's happening, more likely what's predictable, what's probable. Right? You see my point of view? Okay. Now, anyone that was a bull, their buy zone was at this price. And I'm pretty sure when that bearish engulfing candle, lower low, happened, there's no bulls left in the market. That's why your second chance is here off of what? The central pivot point. Okay. And then we get down to target. And what should you probably do? Exit. See, that whole green zone is a target. And the reason it's green is it means up. But you're a bear. Bears don't like up. Bears should get out at up. And that's how I would look at the week. And now something new is happening. But I consider that next week. Would anybody like to know the target for the Euro CAD next week? What is the lowest low probably going to be if this trend continues? Would you like to know? Hey, I traded the 1 minute chart for a year straight. Okay. I have no problem with that. Okay. So, oops. So EuroCAD. What the heck did it go? There we go. I got to go to a higher time frame. And the target is 140.98. So let me do it this way. We've had our little pullback. So let's call it here. I'm going to play that off the central pivot. So that predicts actually 140.49. But to be conservative, 141. Oh, I have to show you to earn your respect? Is that right? No, those are actually weekly, overlapped with monthly. Really? I have to show you 1 minute chart to earn your respect. Doing this webinar every month for 16 and a half years without fail doesn't earn your respect. Trading Forex for 20 years doesn't earn your respect. All right. The only way I can earn your respect is this, huh? I want to get out of the, I'm going to change the template. Whoa, oh, 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 do, 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 do. There's a 5 minute chart. Oh, this one has them on too. Interesting. No, it doesn't. Oh, yeah, it does. Here we go. Get rid of that. You want to do it. Okay. So you can see my price action pivot points are doing similar work, so I don't have to draw them. This is how you trade it, dude. Let me double check what moving average this is. Boo, 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 boo. 55. Let's make it a 21. Okay. The problem with this is it's showing you what has occurred. It doesn't show you what is likely to happen next. And so I have no problem with you trading a 1 minute chart or a 5 minute chart. Look at this. You breach and there's your break, right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher low. Okay, and you just keep doing this all along. What it doesn't prepare you for is the inevitable move this way. And very often you can get caught on the small time frames, which are great for tactics, but are terrible for strategy. Okay, and that's why I start out at higher time frames. Okay, so when I go to the daily, I hope you appreciate if you start here first that the breach here makes us bullish. And a double bottom sets it up. Because remember, let's do what we were talking about earlier. If I'm a bull, writing this is so difficult. If I'm a bull, I'm allowed to buy double bottoms or higher lows. Okay. Okay. You see what I mean? So it gets down to the strategy. You can start buying down here once you can confirm or deny the double bottom, or you trade the breach. Okay. And now you can continue going. You see what I mean? You can continue to the upside. You need to get that right first. Otherwise, scalping is just silly. I mean, it's not silly. It's just incomplete. I mean, it's good. I don't have a problem with scalping. I'm not poo-pooing on scalping. But there's a time and place with everything, and you got to do the strategy first. And so, like, knowing this is great. And then, of course, you can do things like guess that this up here, if you start adding, right, the swings, and sometimes this is visually helpful. Okay. You would probably conclude that somewhere up there we're going to run into trouble with this bullishness, right? Now, I like to use pivot points to measure market, because what we're now talking about is the market. No, my moving averages are the same on every time frame, Peter. Okay. Okay. So now what? You can conclude that as long as you're above this area, you can be a bull. Okay. And so now you're looking at price action, right? Up, down, up, down, up, down, up is the process. Okay. See? Oh, you want dots, do you? I'll give you some dots. I got your dots right here. Let's do... That's interesting. Never tried to put PSAR on a 1 minute. It won't do it. Okay. If you had entered, here's an interesting thing you might like. If you had entered this trade, because you, right, the breakout, the pullback, which we're talking about, so you're long in here, your stop loss currently would be here. You're not even at break even yet. Okay. So anyways, these are the types of charts I like to use on smaller time frames, but I like to then look at a chart like this. I feel much more comfortable because it tells me this is about to stop. And that's what I couldn't see on the smaller time frame. This is going to stop right here. So what's this chart? Okay, this is a bullish monthly pivot, bullish monthly pivot, and it predicts up because it's bullish. And then, okay, this is a weekly bullish, wow, my mouse is crazy, bullish weekly pivot, and that says up to here. And then this is a daily pivot. This is a daily pivot for buying. This is a daily bullish buy-in pivot. This is a daily bullish buy-in pivot. Okay? And now when you look at today's bullish buy-in pivot, it says exit right here. So the monthly plan is it will go higher. The weekly plan is now done. And the daily plan for today, and look, let me do this differently. Let me show you. Let me close this drawing tool. Template, day trading bullish bias. You see it? Oh, son of a. Day trading bullish bias. Only a bull would use this. Oh, I accused you something of Andelo? I didn't know I accused you of anything. So let me update this indicator. And I want to turn on both pivot points. So true. Okay. So if you were a bull and you're a day trader, okay, what day is this? On the 3rd, on the 3rd, okay, remember, we know what's going to happen on Monday. So what's happening now is irrelevant. I want you to think about this. On this day, which was the 3rd, our plan was have price come down to the bullish buying zone and buy it. Okay? So that's the 4th. On the 4th, we expected it to go up, and it did. But when it was up, we already knew that on the 5th, we wanted to buy here. So on the 4th, we're planning the 5th. And on the 3rd, we're planning the 4th. So on the 5th, it goes up like we thought. And we said, well, we want to buy it on the 6th around here, which is today. And it took off. Okay. But look what it says. Can you see it? Profit target conservative. And just above that, profit target aggressive. Says it in plain English, bullish buying zone. And here's the conservative target and the aggressive target. And there's no other data. And we knew this trade plan yesterday. Yesterday. My profit seems so far away. Now I fear loss is here to stay. Oh, I believe in pivot points. Pivot points. Anyways, there you go. Cool, right? That gives you a little taste on how to day trade. What do you think about that? Did you guys click the thumbs up button so that FX Street can get some YouTube love? I hope so. So anyways, CAD crushing it. Oh, you want to do some silver? Sure, XAG. Let's go over at commodities. XAG. Where is my XAG? Here it is. Cool. What do you think? Okay. Well, on a 4-hour, we have technically a 21.55 cross. And if you are a bear on silver, you have permission to engage. But you have to already be a bear. That doesn't necessarily make you a bear. Because, you know, you got this kind of stuff going on, right? Like statistical analysis of this. Okay, do you like those pretty colors? Let me make them a little cleaner. Do you like those pretty colors? All right. So here's what you need to do. Break this into a grid, otherwise known as X and Y axes. Then you need to measure the average of the means. No, the mean of the prices. Okay? The second part you need to measure is the rise over the run, which is slope. So you have the y-axis is equal to the slope of the mean. The x-axis plus the intercept, which is here. Y equals mx plus b. M is equal to rise over run. That's what the rise is, rise over run. So you get the equation, y equals mx plus b. Then what you want to look at is when price is away from the mean, when does it revert back to the mean? When price is away from the mean, when does it revert back to the mean? When does price, right? How far does it go before it goes back? How far does it go before it goes back? How far does it go before it goes back? How far does it go before it goes back? So on and so forth. How far does it go before it goes back? And we look at these distances and we measure that as variance. Okay. And then what we want to do is then use some projections to say when, based on the variance, does price become overbought or oversold? And so what you do is once you calculate the variance, you take the square root. Oh man, sorry about this. It's so hard. I have a gamer mouse and it's just it's too something. So you first calculate the variance. Dude, this bugs me. I need to change my mouse setting somehow. Like I'm really trying to draw this. Okay, variance. Okay, you calculate the variance and then you take the square root of the variance. And you get the green and, right? All that kind of stuff. So here's what I'm trying to say. Nothing on this chart says down. But you could be fundamentally bearish. Fundamentally bearish. So you'd want to look at why gold goes up and down. You might find that when the stock market falls, silver falls. And if you think the stock market is going to fall, then you're like, I think silver is going to fall too. That might be your bias. You might also look at seasonality and say, well, in January, silver often falls. So you could have two fundamental reasons why this might fall. And therefore, if you were going to trade that, remember, you can trade double or triple tops, or you can sell lower highs. Now, you got a lot of risk on this, but it actually made a lower low off of this old level here. So you could have it as a breakout style trade of a top formed up here, then a down, then an up, and the next move is down. You could do all of that. That fits pivot point theory. It might fit your seasonal outlook. It might fit your correlation to the stock market. But technically, it's still bullish. But technicals are not everything. They're very important, but they're not everything. Okay? You see? So, on a smaller time frame, if you're going to be this bear, you would look for bearish setups maybe on a smaller time frame. Does that look good to you right now? No. So you wait. And on a 5-minute chart, it could change. So like now I could drop into my scalping one, my scalping setup. And you might see that on my scalping setup, we have a top, we have a lower high, and this could be considered a lower low. Therefore, this could, in the future, become resistance. So you could try to set something up like that. Okay, you could. But bear in mind, on the longer time frames, it's still very bullish. You might do better selling it next week. But, you know, look, you don't need to be perfect on every trade. A trade is a trade is a trade. Okay? Thank you, Hope. Okay. On a higher time frame, you're going to consider this the support. So I think you might have to do like one of these things, right? Where before it rolls over, it might need, you know, like this and then down, and right? How many points is that? I don't know. And my phone is on fire. Oh, my fixer in Cuba. Yeah, I got a bodyguard in Cuba. Okay. My WTI. Look at that, huh? Look at today's top. Delete. Okay, look at today's top, huh? Nice. Nice. That's some vol, huh? That's some vol. Holy smokes. Let's take a quick look at the short-term indices. Dollar trying to regroup. Yen steady, Swissy steady. CAD doing great. Aussie steady. Euro trying to stabilize. Pound pretty steady. Kiwi pretty steady. So actually not a lot happening, huh? Yeah, all right. Cool. Go back. So I have about 900 pips. So I've made 100 pips while doing today's live stream. I went from 800 pips profit to 900 pips profit. Thank you for hanging with me. I appreciate you. Thank you for everything that you do. I need to go. I got to get in the private jet and fly to Cuba. You might actually, this is kind of a cool meeting. I'm meeting with the former foreign exchange, the head of the foreign exchange department for Cuba. This guy traded Forex for a country. Oh, snap. Hey, I got snapped there. Oh, I just gave the whole back. Anyways, I got to go, babe. I got to jump. It was real. Peace on earth. May the pips be with you. May our profits be above average.